Bitcoin is ripping higher and higher and higher. And I want to talk about two things that just happened that we have not seen since late 2021. And I also want to explain a little bit of why I think this push is not a momentary thing. And in all reality, I think the metrics underlying this rally in Bitcoin, at least the price action, actually truly has some legs to it. Bitcoin regains 1 trillion market cap as the cryptocurrency hits 2-year high. Bitcoin currently trading a hair below 52, which puts its market cap just above $1 trillion. Just an extra 20 billion right there. Now, we have not seen this all the way since the last trading week of December of 21. Bitcoin ripped to 69, and that was in November of 21. Then came down, tried to save itself, and it got horrible from there. But on this recovery, officially hitting levels we have not seen since the crazy year of 2021. Bitcoin hits 51,000, regains 1 trillion market capitalization. Some traders are targeting 64,000 level in the coming weeks as demand from spot Bitcoin ETF fund products grows, and it is growing and growing and growing. In fact, we're seeing demand greatly outpace supply. Michael Saylor believes demand for Bitcoin products is 10x the supply. In fact, if you really dive into at least the recent numbers, it's higher than that. There's 10 times as much demand for Bitcoin coming in these ETFs as there is supply coming from natural sellers who are the miners. So why I think it's even higher than 10, check out what Eric Balachunas has to say. IBIT, which is the BlackRock spot Bitcoin ETF, is popping off, took in nearly $500 million all by itself yesterday, showing an unusually strong second win for a new launch. It is now over $5 billion, which puts it in the top 7% of all ETFs buy size in just 23 trading days. It is in the top 7%. It didn't even take a full month, but the numbers are even greater. There was 631 million of net inflows to the spot Bitcoin ETFs yesterday alone. That is 14 times more demand than the network produced in the same day. Remember, we're only making 900 Bitcoin per 24-hour period right now. We 14x that in terms of the inflows, the demand greatly outpacing the supply. Why are we going up? Why is there so much excitement? And yes, one aspect of it is FOMO fervor. Yeah, you have some shorts getting liquidated, getting blown out, but really it's for good reason. Demand's outpacing supply. Demand, supply, the equilibrium, the crossover point, that's price. When there's more demand than there is supply, price continues to go up and up and up. Now, obviously, this is all on the back of ETF approval, so that's a good thing. Increased demand. We have regulatory clarity, but I would argue it's a bit deeper than that. Obviously, I think over the past year or two, it's good that we got some of those cancerous aspects of the crypto industry out, such as FTX. We have craziness going on right now with Binance. We have Celsius. So we got some of these bad players, these bad actors out of there. That's good. I like that. We have regulatory clarity. We have a new way that Wall Street, because of the regulatory clarity of ETFs, well, they can now get access to it. That's all good. The other thing that I don't really hear the most chatter about is with monetary policy, the Fed fund rate being so jacked up and obviously crazy inflation. I think it's pretty freaking obvious that people are starting to learn about it and saying, wow, we don't want all of our hard-earned money, our saved money to be continually devalued. So they're looking for alternatives. And right now, the cool kid on the block is Bitcoin. So I think that's another thing that's going on. But basically, I think this is a multi-pronged approach, reasoning, if you will, of why the bull camp is absolutely destroying. And for the final part of why I think this can keep going, check this out. Bitcoin futures open interest tops 21 billion, highest since November of 2021. That's the second record-breaking thing we haven't seen since 2021. The dollar value locked in open futures and perpetual futures contracts have topped 21 billion mark for the first time since November of 21. Still, the overall leverage in the market remains low, indicating low odds of sudden liquidation induce price volatility. That's the reasoning right there. Volatility is still low. This thing isn't getting frothy. There's still room. The notional open interest, or the dollar value locked in the number of open or active Bitcoin futures contracts, has risen to a 26-month high. As of writing, open interest in perpetuals and standard futures stood at over 21 billion. Bitcoin trading about 50,000. The open interest tally has increased 22% this year, nearing the record of 24 billion when really Bitcoin was at its all-time high. That's crazy. Leverage, however, magnifies both profits and losses. Futures market is a very leveraged market. Hence, a notable rise in futures open interest is often viewed as a harbinger of price volatility, but that's not what we're seeing right now. The overall leverage in the market remains low, suggesting a low probability of a sudden long buy position liquidation leading to a price crash. Liquidation refers to the forced closure of bullish, long, or bearish short positions by exchanges on account of a margin shortage. Mass liquidations are known to inject bullish or bearish volatility in the market, but this time around, we're good for at least now. The leverage buildup is still relatively low, judging by the Bitcoin futures open interest in BTC terms to remove the price effect. It's climbing fast, but it's not at frothy levels yet. So the TLDR is Bitcoin is ripping for a multitude of reasons. We see that the shorts are getting absolutely steamrolled by the bulls. As I alluded to before, I think there's many reasons for this, and I guess I'm really supporting all of them. But then the next question is okay, does this have legs? According to the futures market, this very much does have legs, but all we definitively know is Bitcoin right now, the price action, the levels we're hitting, we are breaking records we have not seen from 2021. So if you ask me, I think there is good reason to be excited.